The last couple of years has not been kind to ChargePoint holdings. As you can see, price dropped from $17 back in August of 2022 down to all-time lows. And in the process, for those bag holders, we are and have formed an inverse head and shoulder, which is a bullish candle formation. Again, that doesn't mean you get long just because you see a bullish candle formation. Just kind of tells you that we might be at the lows. Now, the question is, we saw what the last 2 years look like in terms of price action. Where will ChargePoint be in the next 10 years? Well, according to one article, if they don't do something different, they may not exist. Shares of ChargePoint have declined since their peak in late 2020 and may now be reaching a value point if the operating results turn around. The 750 million market cap and 2023 revenue of 506 million puts the price to sales multiple at just 1.5 times, the lowest level since the company went public. Now, ChargePoint's strategy has long been to grow its install base of chargers and make high margin subscription revenue that grows as EV adoption increases, but that strategy has turned out to be flawed. In 2023 alone, the company generated 361 million in revenue from chargers and spent 386 million to build them. On top of the losses, revenue was down 1%, so that hasn't been a great business model. Let's talk about subscription. Revenue on subscriptions was up 41% to 120 million, and the gross margin was a fairly impressive 40%, but that came nowhere near enough to cover the 480 million operating expenses, which is why the company had a 458 million loss for the year. Now, a couple of challenges. Probably the biggest challenge is Tesla. First, U.S. automakers are moving to the NACS charging standard, further commoditizing chargers, and that's the Tesla standard charging configuration. Now, for ChargePoint to survive, it needs to start making money by selling chargers. The subscription business is nice, but chargers are the core and heart of their business model, and they have to be profitable to survive. Now, the fundamental problem is the competitive nature of EV chargers. They are effectively the same regardless of manufacturer, making it tough for ChargePoint to make much margin or differentiate itself from the competition. Now, without a sale to another charger company, automaker, or utility, this particular article doesn't see how ChargePoint will survive as a standalone company. And that's the harsh reality for charge companies today in a economy type business model. So where's price going from here? Well, again, you do have this inverse head and shoulder. You can call this a triple bottom as well. Again, another bullish reversal type pattern. Price currently at $1.74. If prices eventually breach the downtrend line, your first target becomes $2.40. Why? Because scrolling out to the weekly chart, that was support, which became resistance. So, if you believe in the company longer term, you buy now. If you want to be a conservative long-term investor, you wait till price closes above the trend line. If you want to be ultra conservative, you wait until you get closes above $2.40. Thanks for watching. Subscribe. Please like the video.